every deal that you sell right now, you need to set it up with them understanding that you're going to do the transaction again in 6 to 12 months. That in itself will double your income if you understand that and you adopt it and you do that. So every sale is something like, it sounds like this. Yeah, so after we create this much savings and we pay off this debt, your FICO is going to grow, your equity is going to grow, and you're going to be in a position where you don't need to do a cash out refinance. So rate and term refinance, you get much lower rate. So then we're going to lower your rate, lower your payment. I can even show you how to shorten the term. So I'll call you back in 6 months. We'll get you into a better payment, better term, right? Does that make sense? Even if it's people who didn't do cash out, like, so, you know, you got Jim with 850 FICO. He's doing a 15-year fix, right? Like, so he's going to shorter terms. He's got a 1.99, whatever. It's not a matter of he can't do anything better. It's a matter of you understanding that when you put him into that loan term, in 6 to 12 months, he may be able to do something different. And when he does something different, you need to expose that and say, hey, I'm gonna help you do this and do that. So in 6 months, I'm gonna call you back and we're gonna do this again, but it's gonna be different. So we're gonna talk about shorter term, better FICO, more equity, more assets, and it's gonna be great. And I'm gonna build this in, so I'm gonna set a reminder right now, right? So you don't need to, you know, call me, I'm gonna call you. And I've always done that. And that's something that I learned probably maybe 7 years into, you know, my seasoning in this industry. And it's something that I wish I knew right from the very beginning, because it taught me the value of your book of business, and it taught you the value of redo business, which is called rewrites. Rewrites, redos, recaptures, whatever you call it. It's business that is super easy because they worked with you before and they were already expecting it. So there's no questions. It was already set up that way. And as you do it more and more, so like, you know, think about, you know, a couple months, let's say 3 months ago, how many loans did you close? So if you're saying, hey, D, I closed 10 loans. Well, imagine if you sold those 10 loans with them understanding that in 6 months, you're going to work with them again, or 12 months, you're going to work with them again. So fast forward 6 months later, you know, you got 10 loans, but now you have 10 other loans that are working with you again. Does that make sense? Now you got 20. And so it compounds, it just grows. So every single day, it's all a matter of how do you feed your pipeline. A lot of loan officers, they get lost because they're managing their pipeline. They're not feeding it. But there are roles to help you manage your pipeline. That's operations, that's processing, underwriting, right? Assistants, juniors. Your job, your sole duty is to keep feeding it, adding to it, growing it. Does that make sense? Because I guarantee you, if you're managing it and you lost a deal today, you feel it more than if you're an LO who was constantly growing it. Meaning, man, I add 2, 3, 4 deals a day. You know, so if I lose one, I'm not feeling it. And when you feel it, you get distracted and you put your energy and your focus and your time in trying to save that deal. But the problem is, though, is that that takes up your valuable time. And so you're not doing anything to build your pipeline. You're trying to maintain it. And when you're trying to maintain it, you get this resentment because you get mad, like, fuck, I can't lose that deal. But you wouldn't be sweating it if you're adding 2 to 3 every day anyway. You see, you get what I'm saying? So it's a choice of either maintaining your pipeline or actually feeding it and growing it, leveraging it.